Good morning, it's Bruce Phares, Windermere Real Estate in Seattle. It is the 19th of March, Thursday. Let's go ahead and take a look at the numbers here. Here are our 6-day pendings currently and our 6-day actives. You can just see the concentration of pendings versus actives here. We will look at the numbers very quickly here and move through this. Let's go grab my little thing here. I go to here first, my 6-day relationship, 6-day off markets in relationship to newly actives. We are still holding right at 40%. So of the weeklies, 7-day time period coming on market, 40% of those are going off market within 6 days. And relationship between those 6-day off markets and the total amount of pending and pending inspections, it's up in the upper 50s at this point, pushing a little bit higher. The total relationship of pendings and pending inspections to total actives in the 135% range. And in terms of the weekly, that's the total numbers. In terms of what's happening on a weekly basis, those P and PIs, the pending inspections, that's around 70%. We've been, bopping up and down there. Let's go ahead and take a look at the year highs. We've had a couple of those in the last couple of days. So our total pending and pending inspections are at a year high, but that's after a crest here that pushed these numbers up. So of course, this total and that total and this total are higher as a result of the year high that we hit yesterday for a 1 day, which is pretty amazing. So 569, we're just up in that 560 range here on total PPIs. Dailies, yesterday we crested, but you can see we came down almost half, if not half. Yep. 296 total on the 6-day off markets. That's pretty amazing. If we hit 300, that'll be quite a mark in relationship to what we're seeing in terms of the newly actives that are coming on. Our 7 days pretty much holding. And then we had our crest yesterday at 20. That was just a big flurry of activity, dropped back down just like this did by half. This is dropped by half. Down in the 10 range. Red is hot, yellow is high, white is white hot. So let's go to here. Our pendings total, once again, because of a crest that we had on the 1 days yesterday, 527 total. And our 1 day yesterday dropped more than half back down to where it was bouncing back and forth down here below for the week below. Our weeklies, pretty much are holding in the 100 to 120 range. And finally, our actives total, they're pretty much in what I'll call the white hot. We crested beginning of the week at 432 new listings that were on market at that point. 214 was the big year high for 7 days, and that was just at the end of last week. So we are back up to 35 here, red hot. We had another one of those right there. Let's see when the last time we had that. We had 54. That was a huge crest a few weeks ago. But you can see the numbers they're just bouncing way below way between the low 10s and then up into the 30s tends to be the action there. Here's a 48 that proves me wrong, as always. Let's go ahead and take a look at NWMLS Mkt Watch after a big crest of new actives coming on here at the beginning of the week, which put the new actives to new pendings relationship in their grids, put it down into the 100%. We've now had new pendings come back up again, and simultaneously new actives drop. And if I look here, I realize I'm wrong once again. Really, the new pendings crested about there or pushed up high. Here's 188. That was the highest number for the year, but they're kind of holding. I'm just bouncing around as fast as I can. And then finally, let's take a look at what's doing with interest rates. I'm going to start bringing this into every one of our conversations at this point. Yeah, we had a lot of press last week about interest rates being dropped, and what happened was I talked to a couple of my lender friends over the last couple of days, and they have just been overwhelmed with refis. And what's happened is the refis then have eaten up the liquidity, the inventory on the back markets. And so what's happened is the banks have decided to go ahead and raise rates in order to curb that thirst for the refi market money so that it could be available for primary purchase money. So if we look here, our rock bottom low for 30 years is 3.29, and it's punched up to 3.65, and I believe that's like a 0.29. Pretty similar for the 15-year, and then your 5-year ARM goes from 3.01 to 3.11. So I just went up one. So let's call it a day here. I hope that's a short set of numbers, and let's see where we'll try to leave this here. I'm trying to think of something clever to end this on. I really don't have anything. So here we are. Everybody's hunkered down, and yet the market continues to do what it's due. So we'll keep posting these on a daily basis. Wishing you well, wishing you health. Please do stay well and stay inside.